Market sell-off has intensified. We are below the 7100 mark, 140 points down for the Nifty. Ajay Srivastava now joins us on a phone line. Ajay, what do you make of this sell-off? It's getting scary day by day.
No, I think it's a logical fallout of what was transpired in the last few days. I think scary is the word, but I think most investors possibly are still on the sideline, which is a good thing. And I think that is where they should remain because, you know, the sell-off which is happening is the first stage of, I believe, a retail sell-off, and we'll see the numbers very shortly. But this is not the end of it because I think this is the first capitulation of the retail market, and which would kind of signal the end of a bear market in a manner of speaking. But I think still there is a way to go if the retail public is pulling out the money.
Right, but do you think that one should use this opportunity to buy or just be on the sidelines for now?
You know, in a choppy sea like this, to take a small dingy out and buy a little bit lots, I don't think makes any sense because you really, you know, in a scenario where it's not about good or bad, it's about a scenario where there's a derating of the market as such. So I would not advise anybody to start doing bottom fishing at this point of time in a significant manner. You know, small investment here or there is good. Okay, you can buy it. The key issue is, are you buying for a big V-shaped recovery, which is unlikely to happen, or are you buying for a very long term, which you can possibly bottom fish any point of time? So if you're expecting for a trading bounce, I think you could have a kind of a volatile session in the next few days because if the liquidity situation does not change in terms of buyers coming to the market, because FIs are sellers in any case, then it doesn't matter on the fundamentals. Then the market has to find newer bottoms.
Right. Ajay Bagga is also joining us on a phone line. Ajay, what would be your view? It's towards the final stage of a sell-off coming in?
I don't know. Final, I would not hazard to say. It's a global sell-off that we are seeing. And, you know, the wisest guys like George Soros are calling it 2008 again. Slowly it's turning, you know, like that. I think the China currency issue is big. $100 billion have gone out of the Chinese reserves in January itself. So I think that issue is still not addressed. The European banking issue is turning quite ugly by the hour. Yesterday we did see a bounce back in European banks, but again today we are seeing a sell-off happening. I think those issues, the contagion issue is the bigger issue. India, you know, the facts are known. Earnings are not recovering. Government is not doing much. There is not bold action which is needed. Finally, today some bureaucrat woke up and came on TV after, you know, months of the market being in doldrums. What we really need is a backstop to the public sector bank mess. The government coming in decisively like they did in 2008. That's the kind of action probably that's needed. So this is the beginning. It's not the end, definitely. You could have a temporary bounce, but the market is going down. Staying on the sidelines is the best strategy. Stay liquid, stay in cash. Don't invest in any asset class right now.
Right. Ajay, what do you make of the SBI numbers? You think that led to the second leg of sell-off and then Europe going down?
Which Ajay are you mentioning?
Mr. Bagga, it's to you.
Yeah. Okay. No, particular stocks I don't talk about, but overall, you know, the PSU numbers have been even worse than anticipated. The slippages are worrisome, and if you look at the provision coverage ratios, that gives you an extrapolation of how much more the whole is going to keep on increasing. So overall, what is needed is very decisive action. You need to either set up a bad bank or set up a mechanism for fast-tracking ARCs to take over these bad assets so the banking system can start functioning again. Otherwise, we stay in this logjam, what we are experiencing with hardly any credit growth. So overall, PSU banks are no-go zone. It's not a value pick. It's a value trap that you're looking at. And I would say even now, better to sell off if you're holding any PSU bank and stay on the sideline. This is going to get messier.
Right, Mr. Srivastava and Mr. Bagga, this is Hina also joining in. Mr. Bagga, while you're clearly saying that, one should clearly stay away, I want to ask Mr. Srivastava first. Now, slowly and gradually, we're also seeing that the domestic factors have also started impacting the markets. It's not just the, international factors which are leading to this kind of weakness. In terms of levels, how soon do you really see Nifty going below that level of 7,000? Do you see that happening, or do you expect a pullback really anytime soon?
It's going to happen before or after the level is crossed, but I think 7,000 is there for the taking. It's on a statistical, if you look at a statistical error, it's almost there at this point of time. So I think that level will be taken out. It's not a question of whether, it will be a question of when. And I think, you're right that domestic factors were impacting the market, but market was on the optimistic side of domestic factors. To me, the biggest domestic factor which is going to impact is not the fundamental alone. Fundamental, we all knew are weak, etc. It was a big money push given by the retail public which are holding the market together. Because if that gives way, then it doesn't matter what the government does, what the budget provides, whatever action the government wants. If the retail public decides to withhold investments or liquidate investments, that will be the biggest factor affecting the Indian market for a very long time. And it doesn't matter fundamental anymore. It's going to be liquidity in the market. Is there anybody out there buying the shares? Because when there are no buyers, fundamentals don't count.
Absolutely. Also, Mr. Srivastava, we've got this big event which is lined up, which is the budget. This time we haven't really seen any pre-budget rally of the sorts. But if the budget does disappoint, then would you see a further, more panic selling into the market? And then what further, how much lower can we go from where we are right now?
Hello.
Mr. Srivastava, if you could hear me, I was asking you that, this time we haven't really seen any pre-budget rally of the sorts. And if the budget does disappoint, it really can't be a miracle. But if there is an inch of a disappointment also that we see coming in from there, how much further lower do you see markets going from where they are right now?
Well, I don't want to go there. It's terrifying to go there because that's the last hope and a gambit of any investor today is that if the government has got some ammunition, and it's not only government, it's also RBI which is involved in the action. Do they have the ammunition to pull out? And not necessarily the budget. They can come up with declarations outside the budget as well. And I think, but today, as we stand here today, what the market requires is diametrically opposite to what the government wants to do with the economy. So I'm not sure whether we are even in the ballpark of a reassuring budget or reassuring government move, because they are moving in a very different direction. Market wants comfort towards growth, market wants comfort to stability, market wants comfort on credit supply and to nationalized banks and capital supports and everything, and a lot of action on PSU sale, etc. The government is going in a different direction. Government says increase taxes, we will do this, and fiscal consolidation and extended and so on. So it's terrifying, but well, the reality might come sooner. So forget the budget. I don't think the budget is important anymore. I think more important is, has the government woken up to the reality of a financial system on the verge of a gridlock?
Absolutely. So we'll have to really see how the government really responds to this entire problem. Thank you very much, gentlemen, for joining us right now.